What's up guys, Mark Fleetwood here. Welcome back to the Daily Grind Trader. In today's video, I'm going to be doing a subscriber request, and it's going to be how to set up charts, how to start knowing what to look for with the charts. So this video is going to be the first in a subsequent series of videos all about technical analysis and chart breakdowns. So stick around, I'll be right back. We're going to dive right into it. Alright guys, let's get the disclaimer out of the way first. I am not a financial advisor and this is not financial advice. Alright guys, let's get started on this. We're going to always keep this sample chart on Bitcoin. We're going to start with Bitcoin, keep it there, and keep it consistent throughout all the videos. Today we're going to focus on a couple key things, and these are some simple things you can do, but they are so key, and it's so key to understand why they are key things. It sounds redundant, but I promise you it'll make sense. What I'm talking about today is going to be making a trend line, making support and resistance lines, the importance and how to use a 7 and 25-day moving average, and how to use your 50-day moving average as dynamic support or resistance. Alright guys, so for the start of this video, I use Binance. I only use Binance for crypto. If you are using other trading platforms, I don't know that they have the same tools, but they should have something similar. On the standard market, standard stock market apps, I would say that Webull is the easiest to use for charts. That's just my opinion. But if you were to start fresh with an app and want to start trading, I would suggest Webull. It is the most user-friendly for charts, in my opinion. So we're going to go to the trade menu, and we are in advanced, and we're going to go to trading view, and then we're going to go full screen on this. So I completely blanked mine out, and yours may already have a couple things listed, but I'm only going to create the indicators that we're going to be using today. So my technical indicators are going to be moving averages. It's the only thing I'm using. And there are other types of moving averages. We're just going to use a standard moving average. Moving average here. 1, 2, 3. We'll put three of them in. So once we have here, we have the cogwheel. Cogwheel we can use to format this. Length is 9. We're going to do a 7-day. We're going to do 25-day. And we're going to do a 200-day. I'm going to change the colors and make them a little bit more visible. I'm also going to make them a little bit wider so they're more visible. Oh, I changed. Okay, there we go. So the 7-day, I'm going to go 7-day with yellow and wide. Okay with that. We'll do 25-day. Do that red. Do that wide. Hit OK there. And 200-day. And we'll keep that purple. We'll just make it wide. Okay. We have our 7-day, our 25-day, and our 200-day. We can add a 50-day if you would like a fourth one, but I typically will keep 7, 25, 200, and I will change my 25-day to a 50-day when I need to see my 50-day moving average. Alright, so first things first, we're going to go in and look at the chart and make sure that we're zoomed out far enough to where we know that what we see is the actual trend. On the daily chart, you can see that very clearly. Everyone knows Bitcoin is in an uptrend. But if we were zoomed in and when we saw this view, so we take this to an hourly, Here in the hourly, this looks like a downtrend. It's like we have a high, a low, a lower high than this, kind of going lower. We got a new lower high, we got a new lower low, new lower low. So it looks like we're in a downtrend. We're just zoomed in too close. This is less than a month's time. This is from the 16th of May to the, or March to the 28th of March. Not enough time to see anything on an hourly. We don't know. You would draw a trend line and draw a downtrend line, and you would be wrong, and it would cost you money. I guarantee you, it would, in the long run, at some way or another, at some point in time, it would cost you money. So again, we're going to zoom out to the 1 day and see that that large downtrend that we saw on the hourly chart wasn't a downtrend. It was a standard retracement that we're breaking out of now. We're breaking out of this retracement. Like I said a couple of videos prior, the 7 and 25 day cross, that was a huge indicator for me. I knew that once that indicator crossed, once the 7-day moving average crossed the 25-day moving average, that was a trigger, that was an indicator that buy pressure was going to come back. We saw it here. The same thing happened. 7 crossed below the 25, jumped up. 7 crossed below the 25, traded sideways a little bit. It stayed under a little bit longer here, but that same day it crossed, we had buy pressure, and we did not drop any lower than the bottom of the day before. Well, slightly, but not significantly. We still had more buy pressure than sell. Alright, so trend line. This first little line here is going to be your trend line. Click the arrow and it will give you all the different ways you can do it. We're going with a standard trend line here. Standard line. We're going to go green because we are bullish. We got a bunch of green candles. And I want to go thick just so it's easy to see. You don't have to make your lines as thick while you're doing your own chart thing. I'm just doing this so it's very easy to identify on this video. Solid, dotted, dashed, left end, stop, right end, stop. We're just going to do a standard line, wide line. Start here at the bottom. I'm going to run this all the way up through. This is generally going to be our trend line. And our trend line is going to very closely match an average between our 7 and 25. It's typically going to be running between our 7 and 25, between our 7 and 25. I could probably come a little bit down further like this, and it'll probably be a little bit more accurate. But as long as you have a standard line and you know that the trend is going up or where the trend is going down, or we are in a point of consolidation or a range, and we're not really going up or down, we're just bouncing off of an area, you know the general picture of the chart. You know the general what the asset, what the coin is doing. You have an idea. Okay, now we have this. We're going to take the trend line again. So click anywhere on the chart to get that screen away, because if you make any adjustments, you will be adjusting the line you just drew. So we're going to make blue lines, bright blue. We're going to make them thinner lines, just so they're not as poignant on the graph. And we're going to create support resistance lines. Now we're not going to have very much in the way of long term, because the price has never touched this area in the long term. This is a new breakout area, but these levels of support and resistance will matter in the future. These will be able to draw all the way as far right as we want, as far right as we can, so that if the price breaks down and starts a downtrend, we know it's going to hit a level of support. It's going to stay there for a while, and even if it breaks through it, there's another level of support, there's another level of support, and then on the way back up, those would be resistance. So I like this area here for a level of support resistance. So I want to go ahead and draw this generally. And you don't have to be exact, you're just going to be close. You want to get to as many points as you can. Now where this will kind of go is that this in a little bit so it's a little bit easier to see. This line stopped this day at this line, broke through it, and then it became a level of support. It tried to sell back, it went through it, but that level of support held, buy pressure picked up, and it bought back above it. Again here, sold down close to it, bought back up. Got close to it, back up. Came down, got very close to it, bought back up, finished here, sold way down, crossed it, and then came up bullish. Crossed it, came back up. Touched it, came up, and started the new trend. So, what I would look for with this, in this area, was crossing the 25-day, 7 crossing the 25, and we're at or near a level of support. You can buy anywhere in this general area here. You're not going to be far from a support, and you're going to have a lot of room to go up. So naturally, the previous high will be a level of resistance. So we're going to draw a new trend line here. This resistance did not last, but one test. Well, one new test. So, bought above it, resisted. This was the resistance. Try to buy above it, resist it. Try to buy above it, resist it. This is where the price pressure, there was just not enough buy pressure to get above this line, and we started a retrace. Coming back, it hit it one time, sold back down, and then it went through it hard. It went straight through it, and the body finished well above it, setting up a new level. So the new level is going to be really based off of here as well, because the next line that we draw is going to be here. Again, you don't have to be exact, you can be close. This was now a support. We got so far through here, we created a new support line. Support, support, support. Big sell pressure, support. Support, support, support. And our new uptrend. The last support resistance line we're going to make is one we're coming up to now. And we're coming up to a hard resistance. Because, where is it at? Yeah, this level at 58,000 was a resistance here, resistance, resistance, broke through it but did not hold. It sold right back below it again, and then it became a resistance yet again. Touched it, sold right back off the next day. Touched it, sold off the same day. Touched it, broke it, sold back off the same day. Touched it, sold off, touched it, sold off. So this thing has been a resistance so many times that even now in the new uptrend, 58,000, that mark of 58.5, call it an even number, 58,500, will be a tough mark to break through and consistently hold above it for 2 consecutive days, to hold above it like that and keep going forward. That is going to be the big resistance moving forward for Bitcoin. So, again, got through some information there. Support and resistance lines can be drawn all over the map. You can draw as many as you want, but I will caution you to find the obvious ones. Find obvious lines, straight line through that has been touched multiple times, has been tested up or down, or both multiple times. And if it's obvious, draw it. If you have to think about it, don't worry about it. If you have to think about it, it likely was not a key level, and is not going to be dire to your success. Keep it simple. If it's obvious, draw it. Otherwise, leave it be. Leave your chart less cluttered. Alright guys, we have our support resistance, we have our trend line, and now we have our 7-day and 25-day moving average. The 7-day moving average is essentially where the chart is always going to be, where your candles are going to be on your 7-day moving average. Trading above it or below it, but always within range of touching it. So on the uptrend, you're always going to be trading above the 7-day moving average. You're going to stay above it. Once you get the reversal, once you have the retrace, you're going to be trading below it until the retrace is over and you start on the uptrend again. What typically happens is going to be that when your 7-day spreads too far away from your 25-day, once this gap is too large, is when you have your retraces. These averages want to stay relatively close. And once it moves too far from each other, that's a trigger for you. That should be a trigger point to say you're not going to buy on this day because your 7-day is way above your 25-day and you have a much better entry point if you wait for it to get closer. Here, when it's right on top of each other where they cross, is going to be one of the lowest points you can buy. This whole time under, it's touching this support. So now you have this support here, and you have probably the lowest entry point that you'll see again, because you know you're in an uptrend, you're in a retrace of an uptrend, and your 7-day is lower than your 25-day, so you're going to be close to bottom. And you know, this small range, this is going to be a 2 to 3% range, in which case you're still in a good position because you have 20, 30, 40% of growth possible. Keep it simple. If your 7-day is too far above your 25-day, it's not a good time to buy. It's not. Very top. Look how far this is away. Now, it looks like this thing is rising, rising, rising. It's going to go to the moon. It's not coming back. It's going to be straight up. Your 7-day gets too far, and it sells off hard. If you bought here at 53,000 on February 21st, you are in a world of hurt by February 27th at 46,000. 1 week, $8,000 lost because you bought while the 7-day moving average was too far away from the 25-day. That's how simple these indicators can be to help you. Alright guys, I'm going to try to wrap this up quickly. I've been talking for a while. So we're going to change the 25-day to a 50-day. I'll show you what this 50-day does. The 50-day becomes dynamic support. What I mean by dynamic support, these straight lines will always be the same dollar amount all the way across the chart, no matter how far in the future you go or how far in the past you go. The 50-day moving average is dynamic support because it will move with the price and with the trend. If your 50-day moving average is going up, your trend is going up. If your candles get too far away from your 50-day moving average, the gap gets too large, you're going to be in a retrace. If you retrace and you go below the 50-day moving average, hold off. We need to find another indicator, because going below the 50-day moving average, significantly below, full body candle below, or a full day, or multiple days, could mean the signal for a trend reversal, and we're now in a downtrend. So we want to hold off and see where this trend goes. At least as a novice trader, at least as a, for lack of a better term, a rookie trader, 50-day moving average. Again, your price wants to be close to it. This one didn't get really close, and I think that's why the subsequent rally afterwards, or the rebound afterwards, wasn't that much higher. That's why I think this one is going to be much stronger, because we got right on that 50-day moving average. the 50-200 correlation, 200-day moving average here. If we start a downtrend and the 50-day crosses down under the 200-day, that is called a death cross. That is a surefire next to guarantee of a trend reversal, and you are looking at a downtrend. Almost 100% looking at a downtrend. Alright guys, I think I covered everything for this video, everything that I want to do for this first of this series. Please guys, like if you like, if you found it informative, if you found the information useful, give it a like, throw a comment out there, and please give me a comment if you want to see more of this series, because I would love to make them, but I want to make sure that they're worthwhile, that they help the channel grow. If you guys don't watch it, it does nothing for me but make time that I could be using in making videos that you guys will enjoy and will watch and will want more of. So give me the feedback, give me the heads up, let me know what we're thinking, and I have no problem with going much deeper into this analytics. So with that being said guys, thanks for watching. Until next time, peace.